The global Forex market operates at a breakneck pace. Billions of dollars change hands in milliseconds. And when a sudden market panic hits, the resulting volatility can clear out a trading account in the blink of an eye. This chart shows a familiar scenario, a rapid succession of steep, aggressive red downward candles. To the naked eye, it looks like a total freefall. Watching this drop unfold, the natural psychological reaction is to jump in and sell. The immediate assumption is that the bears, the sellers, have complete and unchallenged control of the market. But that assumption leads directly into a trap. Without warning, a massive green candle erupts upward. It is a violent short squeeze, instantly erasing the previous downward progress and liquidating everyone who sold at the bottom. Standard candlestick charts only show you the final result of the market's battles. They provide the outcome, but they often hide the underlying effort and true momentum driving the move. Every price tick on your screen represents a constant, invisible tug-of-war between institutional buyers and sellers. Professional traders look past these glowing surface numbers. They don't rely on the visual weight of a candle. They seek to measure the actual momentum behind the trade. One method for quantifying this momentum is the Bears Power Indicator. Developed by Dr. Alexander Elder, this oscillator is built specifically to calculate the raw, mathematical strength of the market's sellers. Price moves only after the balance of power shifts. Identifying those shifts requires a tool that can measure the actual pressure being exerted beneath each candle. The Bears Power Indicator uses a simple subtraction formula. We take the absolute lowest price during a specific period and subtract a 13-period exponential moving average, which acts as a baseline trend line. This isolates the raw selling pressure. This calculation yields a specific number that shows how far the sellers managed to push the market below its established average value. This data is plotted onto a separate histogram below your chart, oscillating around a zero line. Deep bars indicate massive downward pressure, but if they shrink towards zero, sellers are losing control. This mathematical conversion takes an invisible force, the raw selling pressure, and turns it into an undeniable visual footprint. Let's revisit that crashing price chart, this time with the Bears Power histogram underneath. The price chart plunges to a new lower low, but simultaneously, the histogram registers a higher low with shallower bars. This structural mismatch is known as a bullish divergence. The math proves what the candlesticks hide. Even though the price is physically falling, the sellers are exhausted. They have lost their momentum. This discrepancy provides a window into the market's next move. It anticipates a trend reversal by showing exactly where the selling power has dried up, even while the price continues to drop. Warning tone. Despite its accuracy, using the Bears Power Indicator as a standalone buy or sell arrow is a mistake. In a ranging sideways market, relying on it alone can lead to significant losses. Dr. Elder designed this tool to be paired with an overarching trend filter. Specifically, you need to look at the slope of your 13-period exponential moving average. The rule of this system is absolute. If the EMA is sloping upward, you must completely ignore any sell signals generated when the histogram drops below the zero line. Instead, you only use Bears Power to locate exhaustion dips. These are moments when downward momentum temporarily stalls, creating buying opportunities in the direction of the dominant trend. Success requires discipline. Never over-optimize the default 13-period setting, and absolutely always wait for the candlestick to close. Intraday volatility will generate ghost signals that can vanish before the candle is finished. By layering the overarching trend direction with raw seller momentum, you move away from reacting to price illusions and begin operating an objective and